Hey guys, it's Paul from the Pocket Money Investor and welcome to my first ever YouTube video. If you spend countless hours watching YouTube free trade portfolio updates, maybe stocks and shares tips, maybe even some Forex tips, well then you're pretty much like me. So I thought after a while of watching these videos, why not get involved and document my own journey on Freetrade. I've been a member since January 2020, so just over 15 months now. And in that time, I've just invested a very small sum, just £10 a month. So I haven't got thousands and thousands of pounds like you see in some of the other videos. Mine's probably one of the smallest accounts I've ever seen a portfolio update for. But still, nonetheless, I've had great results in the last 12 months or 15 months. And I'm really happy with what I've achieved. So I was thinking, why not document this and hopefully encourage you out there that may not have thousands and thousands to invest, that really want to get involved in investing, encourage you guys to do so, and hopefully reap the rewards. So without further ado, let's jump in to my Freetrade account. So guys, here's my Freetrade portfolio. And as you can see from the top left hand side there, my account value is currently at £366.69, which means since I began investing on Freetrade, I'm up £196.03. Like I said, I only put in £10 a month, and I've worked it out this morning. I've actually put in £164.21. I'm not sure why such an odd figure. Of my own capital to date, and like I said, that's 15 months. So obviously 1 month I've seen a particular share that I wanted and I've invested a further sum. But what I tend to do every payday, first thing I do, £10 into Freetrade, I purchase those shares in either an existing stock I hold or in a new one that I've been looking at and researching. Now, full disclosure here, I have been given some free shares in that past 15 months. I've been given 8 to date, with a total worth of £46.86. The lowest value share I've been given was one for Income and Growth, which was an Investec fund. That's now been merged, and I'll talk about that a little further on into the video. That was £3.06, with my highest value free share actually being a Wetherspoon share. It's quite good because I spent quite a lot of money there, so it's nice to have some money back. And that was actually worth £14.10 when given, but I actually sold at £14.27. I actually held that one for a really long time. Obviously, with the current world situation, the shares, I think I was at a 50% loss near enough at one point, but I held on to it. It was a free share, it didn't cost me anything, and I actually sold it for a small profit. And I think if I'd held on to it longer, I'd have actually made more of a profit. So my current portfolio is actually made up of 10 holdings, and they range from, I've got £2.86 in one, which is a free share. Obviously that's my lowest value holding. And my top value holding is currently worth £123.59, which is in Jubilee Metals, and we'll come to that a little later in the video. So let's start off at the bottom. So I've got £2.86, one share in Direct Line. This was a free share, guys. What I tend to do with the free shares is I try not to sell them for a loss. This one obviously was gifted to me at £3.41 and is currently 16% down. It's only 55p loss, but it was a free share. It's not costing me anything to hold. I think this one is a dividend payer. Yeah, there you go, quite a high dividend yield at 7.75% on this one. Obviously, it's an insurance company in the UK market. I actually used to work in the insurance industry here in the UK, so I know a little bit of the ins and outs. I actually had a really high dividend payout for this one share. I think it was 20p last year, because obviously the lack of claims during the COVID crisis. So it's actually been quite a good one. And I have thought about maybe topping up and buying some more shares, but I'll be honest, insurance doesn't really excite me. I've got no interest in it really. I no longer work in the insurance game for those reasons. So I'll probably hold on, and if it gets back to the price that I was awarded the share at that £3.41, I'll probably sell it. But we'll see how we go on. So the next share in my portfolio is China Special. Now again, this was a free share that was awarded to me, and this was actually the most recent free share I've been awarded. Again, it's currently down 12.81%, 64 pence loss. Again, it's not eating or drinking anything, so it's not costing me anything, hence I've held on to it. And actually, when I got this one, I was actually quite excited. It's not a company or anyone I had on my watch list or I was looking into myself, but it's a trust that obviously exposes me to the Chinese market. I haven't got anything else like this in my portfolio, so I thought actually I'll hold on to this one and see how it performs. Obviously, it hasn't performed great, and if we go over to the yearly view, you can see obviously I had it during the high period. The high peak there, because I was giving it £4.99, so literally right on the height of the values, and it's obviously dropped off that peak there quite a lot. But since then, it has gradually been increasing in value, so it might be one that I might buy into, and I'll obviously average down on that cost per share in my portfolio, and see what comes of it. So yeah, toying with the idea of maybe putting some capital into this one and seeing what the future holds. The next share is TriTracks Big Box. Now this is one of the first shares I bought off my own back. I did my own research, I looked around, saw some news stories and some articles on this company, and it was right at the start, or not long after the COVID crisis had come to the UK. And basically they're a landlord, and they invest in distribution centres, so they're like, you see your big Amazons, etc., on out of town business parks, and when I invested in these, they actually had secured the rents of 90% of their current portfolio. I thought that was pretty strong at the time. My day job is construction property related. So I've got some background knowledge about that type of industry. So I was really impressed. But more at the point, they were actually dividend payers, or they are dividend payers. And I was looking to maybe build up a dividend portfolio. But I soon come to the conclusion that because of the low values I'm invested, just currently, like I said, £10 a month. It doesn't really, you're not going to get anywhere with a dividend portfolio. You can't amount enough shares to make the dividend payments worth it. So I bought in. I'm up overall 57.6% on this one. So a great investment anyway, and I wish I put more into it, to be honest. It only equates to £5.58, which is not a lot of money, obviously, but yeah, hindsight is a wonderful thing, and maybe next time I'll trust my own research and I'll dive in with a bit more capital. The next stock in my portfolio then is the Murray Income, and that's a Standard Life investment trust. Now this one started off as my lowest value free share, as I said earlier in the video, the Income and Growth, which was an Investec, I believe, investment trust, and that one was performing okay, and again, that was when I was looking towards going to a more dividend focused portfolio, and that was paying a good dividend, and I had about £20 worth. So again, coming to the conclusion that the dividend portfolio wasn't really going to suit this low value style of investing. So when this got taken over, it's kind of become a dead share for me. It's also now a plus share, which means I can no longer invest further money into this unless I become a plus member. I'm not a plus member, again, because of the low values I'm talking about at the moment. It's £10 a month charge, and if I'm only investing £10 a month, that charge, obviously as a percentage of the money I'm investing, is actually 100% on a monthly basis. So I would have to go to £20 to maintain the current level, which means I'd be paying 50% fee every month. And obviously as broker fees goes, that is a lot of money. I'm not saying I won't do it in the past. I have had thoughts of maybe topping up, especially my Jubilee Metal investment position, by something like £200-300, and just subscribing for the 1 month to allow me to get into that, allow me to buy more of those stocks. And that's something I will look to do in the future. But obviously for now, I'm just continuing my £10 a month, and using it as an education really for me further down the line when I've got a bit more money to invest, and free cash. On to the next one then. So this is Begbies Traynor. And as you can see, I'm currently at 37.47%, equates to £7.46. Again, not masses of money, but still a great percentage gain on this stock. So these they offer professional administration services. Now, I've actually had dealings with these personally in my day-to-day job. Fortunately, I wasn't on the end of the administration. I was actually the client for dealing the contractual relationship with a third party, and that third party went into administration. And Begbies Traynor were the guys that stepped in, and obviously I was dealing with professionals within that company to kind of sort out the legal logistics of dealing with their assets and completing the work, etc. And obviously at the start of COVID, doom and gloom outlook, everyone in the world thought it was, the world was going to come to a stop. So everyone was touting this as a great investment looking forward, because obviously they were going to have the possibility of stepping into all of these companies that were going to go bust because of COVID. So yeah, I did want to invest a lot more. Unfortunately, the swap over to Freetrade Plus again bit me a little bit, so it's preventing me from doing that at the moment. But yeah, a great percentage gain on this one, and yeah, really happy I invested on this one. Okay, so the next one then, Capita. Again, another one I invested in. Another great gain, 25.77%. So just under the £30 mark for the current value on this one. This one was actually, I listened to quite a lot of like shares, podcasts, etc. And there's quite a few market commentators commentating on this one as a potential good buy. They obviously do a lot with government outsourcing and deal with a lot of government work. They had just gone through a company restructure, and they had some new guys on the board that had really proven themselves and had a really good track record of running companies similar to this. So it was a lot of positive sounds, so I bit the bullet and bought a couple of shares, and obviously done quite well on this one. Yeah, 25.77% gain as I said, so yeah, I'm really happy with this one. Again, hindsight would have been a lovely thing, wish I'd purchased a bit more, but the good thing is with this one, it's not a plus share, so I can top up my position if I do think it has got a bit more longevity to it. Okay, we're getting towards the top of my portfolio now, so this is the fourth largest position I hold, and that's Cineworld. Obviously a bit of a household name, running cinemas across the UK, and I believe they've also got a number of cinemas in the US which have obviously reopened prior to the UK cinemas reopening. Obviously that's due shortly, so fingers crossed this one is going to show more of a recovery. As you can see, bottom of the values bottomed out there, probably just talk of lockdown 3 around the October-November period, and obviously it's continued to recover, but you can still see it's still way short of the pre-COVID values around the 190, or there you go, 155 just prior to COVID actually taking a firm hold here in the UK. So it's shown some recovery, but it's still only at 96 pence, so I still think it's got a little way to go. Obviously a lot of turbulence in this market with Netflix and obviously Warner Brothers and the like now coming to the table. Obviously Warner Brothers, I believe, are offering a straight to kind of home film viewing service, and I think cinemas may struggle after this. But funny enough, I was reading they're actually closing one of their cinemas local to me. They've got two in that location, one in town, one out of town, and they're actually closing the in town one and just keeping the out of town cinema open. So hopefully that shows that they're kind of looking at the most profitable cinemas and venues and just keeping those on. So I'm hoping that'll reflect in the share price going forward. So I'll probably look to hold those on and keep those until I maybe got like a 120, 125 target I'd like to get out on. But in any case, I'm up 50% for them at the moment anyway, so a great gain. Again, value is relatively small, but look at the percentage outcome. That's what I focus on at the moment. We'll see what the future holds for this one. So on to the third biggest position in my portfolio, and that is AFC Energy. And these guys are actually involved in the renewable energy industry, and they produce renewable energy via a hydrogen fuel cell. And for those of you that are watching this video in the UK, you might have seen a clip of one of their products on Top Gear recently. It was the scene where Freddie Flintoff was racing basically an Ironman through the woods in South Wales. And Freddie Flintoff was actually driving one of the all-new electric vehicles being used in the Extreme E race series. Now, AFC Energy are involved in they are the energy partner for Extreme E, and that's how all the electric vehicles are charged, are via one of the AFC Energy hydrogen fuel cell plants. A big motorsport fan myself, so I saw the kind of news articles on this Extreme E, and it was mentioning this hydrogen fuel cell technology, did a bit of reading around it, saw that it was on Freetrade as well. It was one for me to get involved in. I always like to try and invest in stuff that I've got a personal interest in as well, and this being probably the prime example of that. Current value is just under the £50 mark, and that puts me up 11% for this one, or just shy of the 12% mark. This one's going to be a long-term hold for me. I'm probably going to look to top this one up and gain a greater portfolio size on this one. It's still only valued at 60p. I think the potentials of this technology are great. I know they've recently signed a deal with a construction company to provide these fuel cells on large construction projects out in Saudi Arabia, I believe. So I think, look at the wider perspectives for this type of technology are great, and I think hopefully they'll go on to bigger and better things. I think the only thing you can see from there is obviously looking at the year picture, it's quite a volatile stock, so it's not for the faint-hearted, but because that is the one benefit of only dealing with small sums of money, as I'm probably a little less likely to jump out if the stock does go down by maybe 10-15%, where you see others getting a little bit twitchy and maybe selling out and just securing their profit, which is fair enough. But like I said, long-term hold for me, so we'll continue to monitor this one and see where it goes. So similar to the Cineworld stock we discussed earlier, the second biggest holding in my portfolio is currently Hollywood Bowl, sitting at a value of £2.38 per share. So my total portfolio on this one is £61.75, and that gives me a gain of 40.69%. Great gain, really can't complain. Again, I bought this one during COVID, quite early on in COVID. There was a lot of market commentary on Hollywood Bowl and Cineworld comparing the two. I believe I purchased Hollywood Bowl first, and then I went into Cineworld at a later date. Unfortunately, Cineworld carrying a lot of debt, where Hollywood Bowl they've actually got quite a lot lower debt level, and obviously there's less competition in the market. Cineworld, like I said, under competition from Netflix, etc., where Hollywood Bowl are obviously just got competition from other bowling providers. There's not any kind of new to market threat for those guys. So yeah, really performed well. Unfortunately, I've been bit by the Freetrade Plus situation, so I'm unable to top up my position in this one if I wanted to. But yeah, current value is at £2.38 per share. Looking where they were pre-COVID, they're around the 280 mark. I would say 280. I think if this one got to 250, I might look to kind of sell and lock in that profit. I think that would be a healthy percentage gain, because I'm thinking that the market may have already priced in a lot of the gains this one's going to have with the COVID restrictions lifting here in the UK. So I'm thinking the market's probably looking 6 months ahead. So we'll see where this one goes anyway within the next month or two. Like I said, might look to sell my position and maybe top up that AFC Energy position. And then last but not least, the absolute jewel in the crown of my current portfolio is Jubilee Metals. Now these guys extract platinum and more recently copper from mining horizons, from traditional mining. So they actually take a waste product from traditional mining providers, actually purchase the mining horizons from them, and then obviously extract the kind of materials that are actually being missed via more traditional mining methods. So I think, yeah, although it's a mining stock and you wouldn't think that's very environmentally friendly, I think they're reusing what was a waste product and adding further value to that. So yeah, I really think that is, that's providing something of benefit. And I'll be honest, this one I invested in totally by luck. When I opened my Freetrade account back in January 2020, there wasn't actually a purchase limit, and this stock I believe was hovering around the 3 pence mark, and I could buy one share at 3 pence. Now you need to spend a minimum of £2, or your trade needs to execute it as a minimum of £2 on Freetrade for it to go through. So unable to do that anymore, but I was just buying my other stocks and shares, and then if I saw a couple of pence left in my account, I was just buying some Jubilee Metal shares to put that money to work rather than just letting it sit in the account. And obviously I saw it was getting some good gains actually, and then I started reading into the company a bit more and looking at some market commentary, and even recently it's had some really strong financial news come out, and kind of I looked at investor news and reports, etc., and making all the right noises really. So my current position is actually at 351.22% on this one, which makes a gain of £96.20. Incredible. And yeah, hindsight is a wonderful thing, but obviously hindsight, if you stuck £1,000 into it, I might have sold it already, so you can't really say that. But yeah, it just goes to show that even with small investments of like £10 a month, if you catch the right company and they're moving in the right directions, there is potential to make a good gain. So this one, unfortunately, again, has been bitten by the Freetrade Plus scenario. So this one is a difficult one. I would love to top up my position in this one because, like I said, the noise around this company is still very positive. So I still think there's a long way to go on this share. And it might be a situation where I do actually top up with a larger sum to justify paying that £10 for the month that I'll have to pay to be able to access this share. But yeah, we'll see what the future holds, and obviously I'll report on that on future videos. So that's an overview of my portfolio, guys. So yeah, hopefully it just goes to show and hopefully encourages you out there. If you're looking at or thinking about investing, and you're kind of hovering on the fence because you haven't got £1,000, £500 to invest straight off. I'll be honest, when I look back this morning to see how much I'd invested, I actually opened my account with £2. And like I said, every month since, I've been topping up with £10. With 1 month, I think I topped up £22. And I think it was actually because I'd seen a good price on AFC Energy and I wanted to get in. So yeah, even though they seem small sums, don't sit on the fence, get involved, have some fun with it as well. And the way I see it is I'm paying for an education. I'm not from a financial background at all. Like I said, I work in construction. So yeah, I've learned a lot over this past 15 months by having a bit of money or a bit of skin in the game, as they say, even though it's not a lot. Obviously, it's now working up to kind of £360 odd. Still not a lot by any means, but yeah, it's still a night away in a hotel with a girlfriend, and I'm sure she'd love that. But yeah, I'm going to continue to invest like this. Fortunately, as per most people, my money is going elsewhere at the moment. I've got a property that I'm currently renovating, so bathrooms, kitchens, etc. And when those items are passed, then I will obviously look to kind of up what the levels of the sums of money I'm investing on a monthly basis. But until then, I'm content with this. I'm really happy with the performance of the portfolio. Yeah, and fingers crossed, encourage you guys to come on the investment journey and see what you can achieve. And as with everyone who does these Freetrade portfolio updates, guys, if you haven't got a Freetrade account and you are thinking about opening one, link in the description below. And if you sign up via that link, you will get a free share once you sign up. Like I said at the start of this video, my lowest value to date of a free share is £3.06, but with the highest being £14. They do say you can have a free share worth up to £200. I'm yet to see any at that, but I have seen a couple awarded around the £50 mark. So you never know, try your luck. Full disclosure, I will get a free share as well if you do sign up via that link. So you'll be supporting the channel. Currently recording this on an old iPhone, so I'd love to buy a nice camera to do these videos going forward. Yeah, and if you're still watching this video and you're still here with me at the end, thank you very much for watching. Like and subscribe, and I'll be with you next month for the May portfolio update. That's great. Cheers, guys.